Dr. Ammous, I'd like to draw your attention to a comment that Federal Reserve Chair Jerome Powell has recently made this week. In his testimony, he said that crypto assets are highly volatile and therefore not useful as a store of value. He said it is a speculative asset that is essentially a substitute for gold rather than for the dollar. What assumptions is Fed Chair Jerome Powell making here, and do you agree with his statement?
I think, he's probably correct to the extent of his own preference. He seems to prefer currencies that lose value steadily over time with general predictability to currencies that gain value with some volatility. And I think, there are different flavors of ice cream in the world, and there are different kinds of currencies. And the beautiful thing about Bitcoin is that it's now offering us a free market test. We're watching all those national currencies built on the idea that they need to lose value every couple of years to stimulate the economy growth. We're watching them up against a currency that gains value. So, Powell is welcome to hold whichever he wants. But I think, the market shows Bitcoin has appreciated 200% on average every year over the last 10 years. I think, Professor Hanke and Professor Powell need to be asking themselves a little bit more about what is it that people see in this thing? Why has it not been displaced by all the other cryptocurrencies? And I think the point that I'd like to make to Professor Hanke is when you were mentioning the specifications of a great currency, Bitcoin effectively has one that substitutes for most of them, which is the fact that nobody controls it. Nobody can change the supply. It's been 12 years. It's $1 trillion. And nobody has figured out a way to make more Bitcoin, more than what is originally scheduled. So this is the first thing that is truly scarce. And this is what distinguishes Bitcoin from the other currencies, because none of them has demonstrated the degree of immutability that Bitcoin has, which assures everybody in Bitcoin that they can be 100% certain almost that there's never going to be more Bitcoin made. You can't get that kind of security from any of the other networks. And I think this is a very, very important point about what gives Bitcoin value.
Dr. Ammous, I have one more follow-up question for you. You're currently living in Lebanon, where you experience and can observe very high levels of inflation. Now, if I were to present to you options for hedging inflation, let's say gold, Bitcoin, stocks, government-issued bonds, for example, what would be your preferred instrument to protect yourself from inflation with?
I'm not living in Lebanon anymore, but my preferred instrument would be Bitcoin, because I think, the important characteristics of money, the important characteristic of money is saleability. It's the degree to which you can sell it without it losing its value. And I think in Bitcoin's case, there are two parameters for saleability: saleability across time, the ability of money to hold on to its value across time, and saleability across space, the ability to move money across space. And I think Bitcoin wins hands down compared to fiat currencies and gold in that regard. Its ability to hold on to value across time is very good, and it's outstanding. It's 200% appreciation a year, but it's also very cheap to send halfway across the world. And this is when people talk about Bitcoin not having utility. You can send money from the US to China in a couple of hours without having to use any of the national government infrastructure and institutions like the central bank. This is an enormous advantage, which places in Lebanon, they're beginning to see the value of that, because the dollar might be great and it's more acceptable than Bitcoin in a place like Lebanon, but you can't send the dollar abroad because the banks won't let you. The banks are closed. There's capital controls and there's all kinds of problems. Bitcoin gets around that.
Mm-hmm. On Lebanon, David, let me just make a remark, because It's something I follow hour by hour. Actually, in the last year, the Lebanese pound has shed 81% of its value. And today, I just measured the inflation rate. It's 378% per year. They are hyperinflating. They started hyperinflating in July. But this gets to the point about Bitcoin versus the dollar and use and utility. Everyone wants what in Lebanon? They want dollars. Everyone around the world does, and this is a utility. Almost all commodities traded in the world are invoiced and priced in dollars. 40% of all trade, manufacturers, commodities, everything else, are priced in dollars. 60% of all central bank reserves are in dollars. 90% of every foreign exchange transaction has a dollar on one side of the trade. So in terms of use and use value, The dollar is the great currency. It is the international currency. All this Bitcoin talk, it's a minor footnote in terms of utility and use.
All right. So there must be a price at which you would have to, if you think it's small, then you have to be able to name a price at which you would admit that it's no longer small, it's no longer a footnote, because it is much bigger than it was last year in Lebanon. It's not as big as the dollar yet, but it's much bigger than what it was last year. So if the trend continues, at what level would you admit that this is just something that people can use? It works. It does what it says on the tin. You can send it across the world, and it maintains its supply.
It takes time. When Elon Musk first started to invent electricity car, people in the traditional auto industry think that was just a joke, a footnote. But now Tesla is the most valuable auto company in the world. So it takes time. And when the paradigm shifts, it comes slowly and then suddenly.
But I'd like to ask Professor Hanke to specify a price at which Bitcoin becomes big enough for him to stop saying it has a fundamental value.
You just measure the measurements that I've given you, the dimensions that I've given you.
So Bitcoin is currently
in other words, how many commodities? When are we going to start pricing oil and Bitcoin? When are we pricing corn? When are we pricing wheat? Okay, that's a commodities. When are we going to start pricing cars and manufactured goods in Bitcoin? You're talking about the speculative aggregate moving this thing around. I'm talking about the uses of it in transactions.
It is actually being used in transactions, Dr. Hanke. It's probably just not as visible to us in US than to other people living in different regimes where inflation is is taking away their health. For example, in Latin America, there are a lot of commercial entities in their export business. For example, with Asia, they're selling commodities to Asia. They transact in Bitcoin.
This is peanuts. This is peanuts.
Settled in Bitcoin.
This is an academic footnote. The dollar dominates all of these transactions.
Yeah, but the British pound dominated at some point, and it doesn't anymore. Just because it does, it doesn't mean it.
That's exactly my point about entry of a competitor, a superior competitor. And the US dollar became superior after World War I and drove the British pound sterling to the sidelines. I think, as someone who embraces the idea of digital currencies, which I do, and I think that is the future in cryptos. The question is, what kind of superior product would be desirable? And I think a currency board type crypto would be. Now, Facebook with Libra tried this, but they had no one on the team obviously understood currencies very well and how these things work. It turns out I've established 4 currency boards in my life. One in Estonia in 1992. They didn't even have a constitution that had been approved yet in June of 1992. We established what? We established the Estonian krone with a currency board backed 100% with reserves. We did the same thing in Lithuania in 1994. We did the same thing in Bulgaria in 1997 when they were facing a raging hyperinflation with monthly inflation peaking out at 242% a month. We installed a currency board. And Bosnia and Herzegovina, wiped out by civil war in 1997 in August, we established a currency board. All these things work. There are no preconditions. You simply, the currency board does issue a liability. That's whatever the local currency or whatever you call it. It could be a private currency. I'm advocating now private currency boards. So you issue a liability, and that liability is backed with 100% reserves of some anchor asset, and the local asset or asset issued by the currency board trades at a fixed exchange rate that's freely convertible with no restrictions to the anchor.
Mhm.
And
they're called stable coins. They're out there. They're done.
They don't work, and they haven't been audited. They've had all kinds of problems, and that's precisely why they have not been able to nudge. They have reduced the market share of Bitcoin, but they haven't really been able to put it out of the market and compete. They're very inferior, and we had a stillbirth with the Libra white paper actually did mention the words currency board, but it was a false start. It was improperly done, and I think if one was done right, or others were done right, they could be very competitive with Bitcoin and would in fact be superior, actually.
I have a few more questions. Hong, I will let you talk about other forms of cryptocurrencies, but Dr. Ammous, let's talk about the Bitcoin standard. So a currency regime backed by cryptocurrencies, is this possible? Could it happen?
I think so. I think Professor Hanke is stuck at the mental hurdle of thinking of currency purely within the nation-state central bank paradigm. And I think I'd love him to just make the leap of imagining that we've gotten software now that gets around the central bank, gets around the need for a currency board, and just establishes market value, allows market value to accumulate into a free market good that is controlled by nobody. It's not a good that is physical, it is digital. But if I take your computer right now and I return it in the same physical form, but I erase all the files of it, that won't have the same value for you, that computer, right? It's still physically the same, but the digital stuff on it is where you have value. So we can attach value to digital things. What Bitcoin does is that it allows us to replace the bottom layer of central banking and central banks and currency boards with a protocol that is set in digital stone, effectively, and has demonstrated incredible credibility in maintaining its supply and in maintaining the integrity of the network over 12 years. So the question then becomes, you don't need a currency board for Bitcoin because it would defeat the entire point, because then you have a bunch of people who control it, and those people can abuse the authority because they can always issue more liabilities than they have. Bitcoin prevents that possibility entirely. Instead, what we are going to be getting is Bitcoin replacing the currency boards and the central banks, and then we're going to build second layer solutions like the stable coins and like the currency boards and like commercial banking backed by the Bitcoin base layer.
Okay.
Well, what you say about the currency board, it really isn't right. That's technically, you've got things all mixed up. A currency board is not a central bank. It's something completely different. Right. And you could have, by the way, what I've been advocating, and that is a gold-backed currency board with gold as the anchor. Now, who issued the liability of gold? Who's issuing that? Whose liability is gold? It's nobody's.
Let's let Hong
follow up on
respond here. Yeah.
Because I think there are a couple of things that we have discussed back and forth, but I would like to actually go back to almost like take a first principle mentality. And Dr. Hanke, I commend you on your track record of setting up a currency board historically and making that valuable to the people in those countries that have suffered superinflation. One question I would like to ask you to think about, is why would the currency board succeed, right, compared to some of those local currencies? And also, when you talk about the list of good currency standards for a good currency or solid currency, I heard that you mentioned something that I think is very interesting and actually crucial. You mentioned something that's called monetary policy stability. I think that is really important. That is actually the key point. When Powell was talking about Bitcoin's volatility, I think he's mixing up with the price volatility and the monetary policy stability. I think whenever we talk historically, when people chose people around the world who have been chosen gold as the store of value historically before sovereign currency came up, that's because gold is more predictable, right? That level of predictability in its monetary policy is what is driving its success historically. And when you think about all the currency board that has been successful, they have been successful because they have been more predictable than those local currencies issued by local central banks who have no discipline in their monetary policy. It is totally unpredictable.
Professor Hanke talked about superior forms of cryptocurrencies that could one day dethrone Bitcoin and drive its price down. Do these currencies already exist? Are there alternative coins out there that you see fitting this definition?
No, there is no superior form currently that is more superior than Bitcoin, that is more predictable, that is verifiable. Actually, Dr. Hanke was talking about the potentially creating a currency board that is more superior than Bitcoin, maybe pegging against gold. How verifiable is that? Bitcoin is a network that is P2P, that's sensitive, censorship resistant. Anyone, if you are interested in setting up a node and check it out, you can check it out. You can verify it. It's verifiable to everyone in the world, right? How can that be done for gold? You have to have a third party running the reserve, checking it, and have then invite other third parties like auditors and legal counsels to verify that. There are a lot of potential points of failure in that process. But in Bitcoin, there is no single point of failure. That is what has been making it super exciting and different and unique and superior to all the other alternatives that we have in our traditional mindset. And again, I agree with Dr. Saifedean on the comment that when you're talking about the currency criteria, those are our currencies issued by government, issued by central banks. But that's an assumption. That's not a given. Like in our history of monetary usage for human beings, not all the civilizations are using currency issued by central banks, issued by the government. Mm-hmm. Gold for a long time is not issued by any government or bank. It was later taken by the government as kind of the reserve and asked the people not to use it other than being a reserve, right?
Well, now remember we had private banking. The unit of account was something that was indicated or established by a government, but the issue of private money was very common. So what you're saying is just not correct. There was a lot of private money and private issue.
Those private monies are issued by third parties, by individuals, either an individual person or individual organization. In Bitcoin's case, no third party has been issuing it or controlling the supply or managing the management of it. It's all run on a protocol, like Professor Saifedean was saying. It was run on the open source protocol. Everybody can see it. Everybody who are interested enough to learn about it can go actually and run the node. Anybody who are interested in doing it can actually build on top of it. So it's very different. There's no single point of failure. We're taking away.
You keep saying what happened with the various scandals that have popped up, like Mt. Gox and so forth. How do you classify that? Wasn't that a failure? What was, you say that this is a fail-safe system?
Yeah, Dr. Ammous, I'd like to respond.
I'd respond if I pick your pocket and I take your wallet and I take $500 out of it. That's not a failure of the U.S. Federal Reserve Central Bank. The $500 are still working as intended. So when we talk about Bitcoin not being not failing and not being attacked, the protocol itself has not validated a single fraudulent transaction in 12 years of running. Now, real transactions were done on the network where somebody managed to take somebody else's keys and effectively stole their money. That is a feature in all money. If you can own it, it can be taken away from you. And so, Bitcoin cannot remove theft from human nature. That'll always be the case. And as long as Bitcoin has ownership, it can be stolen. But the network itself continues to operate. So that's why I think it functions better. It's better understood as a base layer for financial settlement layers and solutions that will be built on top of it.
Okay, I have one final.
I just want to emphasize again that monetary policy stability is really the key, and I would ask.
Well, see,
Dr.
I disagree with that, because we have a stable, inelastic supply of Bitcoin, and that by definition means that as the demand fluctuates, the price will fluctuate, and you'll have it's an unstable system. It isn't a stable system; it's an unstable system, because the supply curve is completely inelastic ultimately.
But
and as a result of that, the only process by which any adjustment can take place is the price. So the price will be very volatile.
About price in denomination of US dollar or any other fiat.
I have one final topic that I'd like to address.
I just really need to make one small answer
sure,
to this.
Yeah, go ahead. One last point, we'll have to move on.
Yeah. Jastrom's book, The Golden Constant. Gold developed the most constant value over time and did that for centuries, as discussed in that book. But you look at gold's supply, it also didn't have a currency board. It also didn't have a monetary policy where somebody was practicing, monetary supply in order to stabilize the price of gold. In fact, what gave gold that stability was the fact that it had the least elasticity of supply response to demand. Gold is the one good whose supply increases the least every year because it doesn't corrode. So gold that has been produced over thousands of years is accumulating. And so marginal production is always very tiny. Because marginal new production is always tiny compared to the stockpiles, that's what gave gold its stability, because its market is predominantly a monetary market and very little demand for industry and very little impact of mining. So Bitcoin actually improves on that because it has a terminal growth rate of 0. So it should actually in time become better gold than gold in this regard. And I think, volatility is going to be with us for a while because Bitcoin is still very small and it's going to grow. But I think, that before we get to the point where we can use Bitcoin to buy our coffee, there is an enormous stage to cross first, which is people need to build cash balances in Bitcoin so that they can trade other goods with Bitcoin. But we're nowhere near that. The total amount of cash balances in Bitcoin are less than 1% of total cash balances in the world. But as it grows, I think we're going to see more of that. So I think, from now until the point where you can buy your coffee with Bitcoin, there is an enormous, enormous opportunity of essentially a new asset monetizing that could eat up bonds and could eat up all kinds of other stores of value that people are using. So, you'll get your stability to buy coffee at a price of Bitcoin, maybe $1 million or $5 million. So, you're welcome to sit it out and wait out until then, or you can buy Bitcoins now, speculating on the fact that this is going to happen. And if you are correct, it includes, it will be massively rewarding in the long run.
Okay, I have one final topic, and I'll let you go first, Dr. Ammous, because that was a good segue. The concept of central bank-backed digital currency. Now, this is being issued in some places already. The Federal Reserve in the U.S. has not indicated they are doing this immediately. Do we need a digital currency, a national unit of account backed by digital currency? What would be the motivations of implementing such a concept, Dr. Ammous?
I think, central banks, their motivation is going to be to continue to do what are their main priorities and tasks, which is managing monetary supply and controlling payment clearance. So if they do build their central bank digital currencies, they're going to be digital, but they're going to miss the most important characteristics that make Bitcoin important, which is that Bitcoin's monetary policy is transparent, and payment clearance is automated by cryptography. So central banks cannot do this because it would defeat their entire purpose. They can't just replace their monetary policy with a strict code that they leave alone. That's not what they were meant to be made. So in my mind, what central bank digital currencies are going to do are going to lead to more efficient, more effective surveillance by central banks and more effective inflation by central banks. And so they're going to make national currencies less useful as a store of value in the long run. And I think ultimately they're going to serve as advertisements for Bitcoin's value proposition. I think that's the long run effect of it. When people realize the difference between what their central bank is giving them versus Bitcoin, I think that's going to be an enormous advertisement for Bitcoin.
Hong, what are your thoughts on CBDC, and what do you think is the future of digital currencies as an asset class?
On CBDC, my point of view is the same with Dr. Ammous. I don't have anything additional to add. I think it's a combination, the worst of the two worlds. Let's see what happens.
So you don't think it's a good idea?
Well, it can help. It can help adoption. It can help promote awareness of digital currency. But it misses the most important point, and actually essential strengthen the bad part of fiat currency system.
Okay, and Professor Hanke, I'll let you have the last word. Should central banks adopt Bitcoin or any other form of cryptocurrencies as a national unit of account?
No. And the confusion that's been brought in here about currency boards, by the way, currency boards, let me say unambiguously, they have no monetary policy. They have an exchange rate policy. They exchange one asset for another asset at a fixed exchange rate. And it's credible because the anchor asset that they hold covers the full valuation of any liability that they issue. So they're completely credible, but they are not
more liability until they issue more liabilities.
No, they can't issue more liabilities until they have 100% of the anchor currency or asset as a reserve. So they have no monetary policy. You're just confused about this. You don't understand.
I apologize. I think you're underestimating what I'm trying to say here. It's the fact that they stick to redemption is a monetary policy. So the fact that they continue to redeem it and they don't issue more liability that is a monetary policy.
That's not.
You know,
the president can't put a gun. Policy. It's an exchange rate policy, but not a monetary policy.
Yeah, but the president can't put a gun to the head of the chief of the currency board, and they can make more money to finance a war or to finance some new hospital building or something like that. And so you're back at square one. With Bitcoin,
no, you aren't. The only way they could do that is if they brought in the anchor currency and exchanged it for whatever was being issued as a liability by the currency board. They cannot engage in monetary policy. You just do not understand the mechanism. So there's
the mechanism can be broken and it can be replaced and it can change.
I think Dr. Hanke, what you're saying,
the conversation, yeah.
I think Dr. Hanke, what you're saying is in a monetary board, there's no sovereign monetary policy because you're looking for free capital flow and also fixed exchange rate, right? So you have to give up sovereign monetary policy, i.e. the monetary policy for a monetary board is actually the monetary policy of the anchored assets. For example, if you're using gold to anchor it, that's the monetary policy of the gold that's actually being used.
Not really. Go to Hong Kong and figure out how the thing works, and you'll see that the quantity of Hong Kong dollars in circulation is strictly a matter of the demand for Hong Kong dollars. In that sense, it's just exactly like Bitcoin.
Okay.
It's the demand, the quantity of the issue of a currency from a currency board is strictly a function of only one thing, and that's the demand for that currency. That's
not what Bitcoin is like.
That determines the quantity of the currency that's in circulation. There is no monetary policy.
We have to end it there because that's all the time we have. But I think you all got your points across. Thank you very much for your time. That was a great talk. Hong, Dr. Ammous, and Professor Hanke, thank you all for participating and being on the show with us.
Thank you for having us.
I hope to speak with all of you individually again very soon. Thank you. And thank you for watching Kitco News. Stay tuned for more coverage. I'm David Lin.